Good afternoon, everyone. Welcome to Hit the Bids Weekly Market Watch here on May 31st. Today we're going to be taking a look back on our prior week's action, see what unfolded last week, and how it's going to help us navigate these markets going into week 22 here. We're going to just be keeping an eye out for key levels to watch and potential opportunities to come in the week ahead. So that being said, let's dive right in here, starting off with our cattle markets. Feeders and fats both have been pretty range bound over the last 2 weeks. Prices not really gaining any ground, but not really losing ground either. These fats are hanging out here just above $2, getting comfortable in this $2 range, while those feeders continue to push up towards that $3 mark. We are seeing that August feeder contract right around that $3 mark. Prices just getting comfortable as it's getting used to these new higher prices. Starting off here with our August live cattle. Last week we did have a short 4-day trading week following the Memorial Day holiday. We did see a nice volatile start to the week with prices opening up on Tuesday here right around 211, taking out that prior week's high and that prior week's low all on that first day, $4.80 range, completely taking out that whole prior week's range on Tuesday. We did see good supportive action, though, with the price undercutting that prior week's low. The bulls were able to step back in and support this market at that prior week's low, as well as this 20-day moving average. Over the last 2 weeks, we have seen good support on that rising 20-day moving average, prices bouncing off of it. But just seeing price struggle to chew through this supply created back on May 14th on that climax top. If we take a look on our lower time frame here, this little pocket of volume between 211 and 212 is kind of the controlling point right now on a shorter time frame. Each time we've seen price push up into it, we've seen that selling pressure step back in and reject those higher prices. However, just that initial sell-off and Friday's breakdown, we're continuing to see higher lows here, so good signs on that side from the bulls at least. If we take a look at our volume profile over the last month of May here, we are seeing a nice equal distribution of volume across this range. This good D-shaped profile here showing that dips are going to be bought, and these highs we're going to continue to see resistance as we chew through this leftover supply here. This is just typical of a range-bound environment. Wouldn't be surprised to see a continued chop here over next week, as we are seeing a pullback more through time rather than price. The last few pullbacks we've seen, we've undercut that 50-day moving average back in March and early April. So far, the pullback hasn't been as steep or aggressive to the downside, but we are seeing just price balancing out here and trading sideways. One thing we're going to keep an eye out going forward from here is our new 4-week low here at 205.32. This is a controlling point that we want to make sure this market is able to maintain from the bull standpoint. If we start to see offers come in below 205.32, a new 4-week low could bring on some added selling pressure. We do have a little pocket down here around this 204 area where we could see support step in at this 50-day moving average, but historically speaking, just want to be cautious. If we get offers below a 4-week low, that can usually bring a little bit of selling pressure. So that's just going to be the level for the bulls to defend going into the next week and going forward here. We are seeing continued supportive action here with higher lows. So the bulls still have the wind at their backs and the big picture uptrend on their side. Still anticipate new all-time highs to come from here and dips to be bought up. Just want to be cautious if we start to see breakdowns, and just given a good line in the sand here to trade around and defend. So going into the new week, we still could see a little bit of a pushback from the supply in this 211 to 212 area, but be looking for dips to buy, and the bulls should try and carry this market higher going into the summer here. Now let's jump over to that feeder market. We saw a volatile start to the week last week as well, with Tuesday's action taking out the high and the low of the prior week. Prices were rejected down there at 293, showing support as it neared that 50-day moving average, as well as this 4-week low. This 293 is the 4-week low in the feeders as well. So this is going to be the level that we're going to need to defend from the bull side. offers below 293 could cause a bit of a flush and get a little bit of added selling pressure. However, we still do have this big picture uptrend and the wind at the bull's back here. Be looking for that upside to continue in the week ahead. However, just having to chew through that supply following this pullback here as well. Look for dips in the low end of this range to be bought up and a continued upside to climb out of here. Did get that gap close on Friday, but price did pull back. We want to see this 20-day moving average continue to hold price or support price in this area. We do have a little bit wider ranges here in this feeder market, but the upside potential is still there. Just want to be making sure that we defend this 293 line, but we do expect to see continued higher prices here heading into the summer. Next up, let's jump over into those July corn futures. Last week we did see a nice rejection. The bears were able to step back in and resume this downtrend. We're anticipating to see some resistance in this 460 to 465 area, which we saw price balance out for about 3 or 4 days in this area as the bulls and bears battled it out. The bears were able to win and eventually getting this breakdown below 458, which was last week's pivot point. Did see it's Wednesday through Friday, just continued selling pressure all week long with a nice strong close by the bears, closing this market on the weekly lows. Be looking for the bears to continue the selling pressure as we go into the new week. We do have this downtrend intact and these key moving averages keeping a lid on price here. Look for that price to continue to have some downside momentum and head back into this 436 to 440 demand zone. This is a level that we've seen good support at dating back to October, November of 24. This is, we've obviously got some leftover buyers that created this big rip higher to start the year. As we start to chew through that area, we do expect to see a little bit of fight from the bulls down here. However, if this 436 level that we've tested 3 or 4 times over the last 6 months here, if we do see that 436 give way, we could really see the selling pressure increase and accelerate and head back towards that $4 mark and potentially just new contract lows here. Downside is expected to continue. Look for corn prices to keep getting cheaper in the week ahead. The crude oil market continues to stay pretty steady. We do see oil being pretty comfortable down here in the low 60s. This is a good spot for price to hang out at. Apparently the bulls and bears agreeing on price with no real conviction from either side here. We saw just a continued chop all week long last week. Prices not really going anywhere, taking out prior day highs and prior day lows, and just really choppy action. On a lower time frame, this is something you could kind of trade the swings back and forth between 60 and 64. However, price just doesn't seem to be in a hurry to go anywhere. With that range-bound action over the last 3 or 4 weeks here, I don't expect price to really be in a hurry to go anywhere right away this week. We did see a brief test of the $60 line on Friday, showing the bears might have a little bit of strength in them here at the moment. If the bears are able to get a push below 60 early to start the week and get a close below this level, I would say we could resume this downtrend and head back towards 55. That $55 mark is going to be the level that the bulls will be looking to defend once again, so that's going to be target 1. Below that, we could really see more selling pressure. However, with prices hanging out and chopping up the way they have been, wouldn't be surprised to see prices just continue to stay steady. Bulls need to see bids above 64. If they do get some momentum above 64 and a close above here, we could see a bit of a spike and a bit of a short squeeze. We have seen that happen over the last year or two. Big picture downtrend and rangy action, followed by the occasional squeeze higher that can shoot these oil prices higher in a hurry. However, I don't see higher prices being sustainable, but just a level to be cautious of. If we do get above 64, we could see a brief spike. We have seen that recently, so just want to be cautious of that for a potential squeezy environment. In the meantime, expect prices just to stay steady and very little volatility to come out of this crude oil market. Now over to the equity markets. Our indexes seeing some constructive action last week. Early rally to start the week. Um, we saw some good upside on Tuesday and pushing up even above 6,000 briefly on Thursday. Wednesday night evening session actually, before seeing that dip back down below 5,900. We did see Friday close back above that 5,900 level, which was our pivot point for last week. This is good supportive action here on the S&P. The Nasdaq also holding this 3-week range we've been in. The Dow is seeing some good constructive action as well, showing good support at these 20 and 50-day moving average, as well as the 200-day moving average. We've been able to get above them, pull back, and find support at these key moving average. This is a good sign. We are starting to see some equal highs come in here right around 43,000 to 43,200. This is a level that if we see the Dow break out above 43, we could really see these laggards kick in and try and catch up to the leaders in the tech world. We do have a nice strong uptrend intact here on the Nasdaq and the S&P. Look for that upside to continue. We do have a good environment here for a potential power trend to finish off this quarter two as we head into the summer. Be looking for stocks to keep adding value and heading back towards these all-time highs on these indexes. This week we do have some jobs data sprinkled in throughout the week. Here we do have manufacturing data on Monday, as well as job openings throughout the rest of the week. The big ones are going to be these non-farm payrolls on Friday and jobless claims. All of this coming in before the market open. Just those are going to be some events to keep an eye on as we head into the new week. Those are some data points that could cause a little bit of volatility in these markets. As that employment data is what this market has really been watching recently. But the picture, technically speaking, looks very clean and constructive. Look for continued upside. And that's all we got for this week. Have a good evening.